In a rapidly evolving digital landscape, Hong Kong is setting its sights on becoming a major player in the cryptocurrency sector by exploring the introduction of crypto derivatives and margin lending. This move comes as the region seeks to innovate within the digital asset space, catering to a growing demand for more sophisticated trading options. Amidst a backdrop of fluctuating Bitcoin prices and ongoing investigations into fraudulent schemes, the city's ambitions highlight both the potential and the risks associated with cryptocurrency investments. Hong Kong's financial regulators are reportedly considering the introduction of cryptocurrency derivatives to enhance the trading ecosystem. By allowing investors to engage in margin lending, borrowing funds to amplify their investment capabilities, authorities aim to create a more dynamic environment that could attract institutional players. According to a spokesperson from the Hong Kong Monetary Authority, "We are committed to fostering innovation while ensuring robust investor protection and market integrity." This approach signals a balancing act between encouraging financial growth and maintaining regulatory oversight. The timing of this initiative aligns with an uptick in cryptocurrency interest, particularly as Bitcoin recently surged in value. Notably, institutional investors are stepping back into the crypto market, with reports indicating that major players are increasingly purchasing Bitcoin. This resurgence in buying activity underscores a renewed confidence in digital assets, though it remains to be seen how fluctuations will continue to impact the market. As one analyst put it, the return of institutional interest is a strong signal that the crypto market is maturing, yet investors must remain cautious of its inherent volatility. However, the cryptocurrency landscape is not without its challenges. Just as Hong Kong aims to expand its crypto offerings, the industry is still grappling with the shadows of past fraudulent activities. A recent case involving a Stuart man who pleaded guilty to orchestrating a $100 million Ponzi scheme serves as a stark reminder of the risks associated with digital currencies. The individual was ordered to pay $1.1 million in restitution, prompting further discussions around the necessity for stringent regulatory frameworks to protect investors from similar scams. Additionally, as the conversation around cryptocurrency evolves, new concepts such as cryptocurrency token reserves are gaining traction. These reserves are increasingly seen as a strategic move for projects aiming to enhance their legitimacy and stability. For instance, a recent plan backed by former President Trump aims to leverage token reserves, potentially reshaping how political figures engage with the crypto market. As outlined by a political analyst, this initiative could redefine the intersection of politics and cryptocurrency, presenting an opportunity for a new form of fundraising. In conclusion, Hong Kong's exploration of crypto derivatives and margin lending reflects a broader trend towards the institutionalization of cryptocurrencies. As the city positions itself as a hub for digital assets, ongoing discussions about regulation, investor protection, and the implications of past fraud cases will shape the future landscape of cryptocurrency trading. As the market continues to evolve, stakeholders will need to navigate these complexities, ensuring that innovation does not come at the expense of security and trust. The coming months will undoubtedly be pivotal for Hong Kong's digital asset ambitions and the global cryptocurrency market as a whole. As the cryptocurrency market continues to grapple with volatility, recent developments have raised both concerns and hopes among investors and analysts alike. With Bitcoin's price oscillating and various factors influencing its trajectory, the landscape of digital currencies is as dynamic as ever. A warning about potential price suppression coupled with the emergence of a death cross pattern has ignited fears of a significant downturn, while contrasting narratives from market leaders suggest a bullish outlook. On February 19, 2025, Forbes reported a stark warning regarding the possibility of serious suppression of Bitcoin prices. Analysts have noted that this price suppression could coincide with a technical signal known as a death cross, which occurs when a short-term moving average falls below a long-term moving average. This pattern has historically been associated with bearish trends in the market, leading to heightened anxiety among investors. The interplay of market forces that could lead to such suppression remains a point of contention, but the implications are clear. A downturn could further erode investor confidence in Bitcoin. a currency still struggling to establish itself as a stable asset. Contrasting this bleak outlook, Barron's highlighted that institutional investments in cryptocurrency are on the rise, with major players reportedly increasing their Bitcoin holdings. This surge in buying activity from institutional investors suggests a foundation of confidence in the long-term potential of Bitcoin despite the current price fluctuations. The article notes that these investments could serve to stabilize the market and potentially counteract the effects of any price suppression. Adding to the optimistic narrative, Blockstream's CEO Adam Back asserted that Bitcoin's bull market is just beginning, supported by a variety of data indicating a forthcoming rally. Back's confidence reflects a broader sentiment within segments of the cryptocurrency community that the current downturn may simply be a correction rather than a long-term trend. He emphasized that historical patterns often precede significant upward movements in Bitcoin's price, suggesting that investors should remain vigilant and prepared for potential gains ahead. Meanwhile, international developments, particularly in Hong Kong, signal a broader acceptance and integration of cryptocurrencies into traditional financial systems. On the same day, Reuters reported that Hong Kong is considering the introduction of crypto derivatives and margin lending as part of its digital asset strategy. This move towards regulatory clarity and product diversification could provide a more structured environment for trading cryptocurrencies, thereby attracting new investors and further legitimizing the space. As the situation unfolds, the juxtaposition of bearish warnings against bullish sentiments creates a complex narrative for Bitcoin and cryptocurrencies at large. Investors are left to navigate these contrasting viewpoints, weighing the potential for both downturns and recoveries. The coming weeks will be crucial as market reactions to both external developments and internal dynamics will shape the future trajectory of Bitcoin. The ongoing evolution of regulations, market sentiment, and institutional involvement will undoubtedly play pivotal roles in determining whether the cryptocurrency market will stabilize or face further challenges. In conclusion, while the current climate for Bitcoin may be fraught with uncertainty, the potential for recovery and growth remains. As both institutional investments and regulatory advancements emerge, the cryptocurrency community will be watching closely for signs of a resurgence. Whether through overcoming the fear of price suppression or capitalizing on bullish trends, the future of Bitcoin and the broader cryptocurrency market is poised for significant developments in the months to come. In an unexpected twist to the cryptocurrency landscape, former President Donald Trump has initiated a promotional strategy that merges politics with digital finance. He is offering $50 worth of his memecoin, dubbed Dollar Trump, to supporters who have previously purchased merchandise from his official website. This move aims to cultivate what he describes as the biggest, strongest crypto community the world has ever experienced, and it underscores the intricate relationship between political branding and cryptocurrency ventures. According to details from Trump's memecoin website, individuals who bought specific merchandise, including Trump-branded watches, fragrances, and digital trading cards, before February 15 are eligible to receive $3 Trump tokens. This token distribution will occur through a process known as airdropping, where tokens are directly deposited into the recipient's crypto wallets. Participants have until March 1 to claim their rewards using the email associated with their purchases. The launch of the Dollar Trump token coincided with a surge in interest within the cryptocurrency market, where it quickly ascended to the ranks of the top 15 cryptocurrencies, boasting a market cap of approximately $14 billion. However, the initial excitement has since waned, with the token's value plummeting nearly 80% from its peak of $73 in January, now trading around $16. Critics have raised alarms about the potential for a rug pull given Trump's 80% ownership stake in the token, which could allow for manipulative price inflation followed by a sudden sell-off. Since its introduction, the Dollar Trump token has already cost investors over $2 billion, according to an analysis by the New York Times. Furthermore, crypto data firms Merkle Science and Chainalysis report that trading fees associated with the token have generated roughly $100 million for the entities backing it, including the Trump Organization. Trump's engagement with the cryptocurrency market is not limited to his memecoin alone. Following his inauguration, the overall crypto market experienced volatility, with Bitcoin hitting record highs amidst speculation about potential pro-crypto executive orders from the new administration. This sentiment was echoed by many in the crypto space, who anticipate that Trump's presidency could usher in a more favorable regulatory environment for digital currencies. Adding to the intrigue, Trump recently endorsed Ripple's CEO Brad Garlinghouse on his social media platform Truth Social, remarking on the positive outlook for the crypto market under his administration. Following this endorsement, XRP saw a notable price increase, further indicating the influence of Trump's political capital on cryptocurrency values. However, the volatility surrounding these memecoins, including both $Trump and $Melania launched by his wife, has drawn skepticism from seasoned investors. Financial analysts caution against engaging with such speculative assets, highlighting a lack of fundamental value driving their prices. The consensus among experts suggests that while speculative investments can yield high returns, they carry significant risks, often likened to gambling. As the crypto landscape continues to navigate this politically charged environment, observers remain keenly aware of the implications of Trump's actions on market dynamics. The future trajectory of cryptocurrencies, particularly those directly associated with Trump, will likely depend on the administration's regulatory stance and market responses to ongoing developments in the digital finance sector. With speculation rife and stakes high, both investors and enthusiasts are left to ponder the true potential of Trump's venture into the crypto world. As the cryptocurrency market continues to navigate its inherent volatility, Ethereum ETH remains a focal point for investors and analysts alike. Recent data highlights a complex landscape where both bullish and bearish sentiments coalesce around this leading blockchain platform. With Ethereum's price fluctuating and significant developments on the horizon, many are left pondering whether now is the right time to invest in ETH or explore emerging alternatives. Ethereum's price dynamics have been particularly intriguing in early 2025. Following a challenging period marked by a 37% decline in value since November 2024, ETH recently showed signs of recovery. On February 17, the cryptocurrency reached a height of $2,832, only to retract to $2,687 shortly thereafter. This brief ascent occurred against a backdrop where the broader cryptocurrency market had dipped by 2.4%. Observers note that this volatility is indicative of Ethereum's ongoing struggle amidst shifting investor sentiment. A positive signal comes from on-chain activity, which shows a marked increase in ETH withdrawals from exchanges. According to data from Sentiment, only 6.38% of the total ETH supply remains on exchanges, a historically low figure. This trend is often interpreted as a positive long-term indicator, suggesting that investors are moving their holdings into cold wallets, reflecting increased confidence in Ethereum's future. The upcoming Pectra update set for April 2025 promises significant enhancements to the Ethereum network, including the integration of up to 20 Ethereum Improvement Proposals (EIPs) and a doubling of network capacity. These technical advancements could serve as a catalyst for renewed investor interest, although tensions within the Ethereum community, exemplified by the emergence of a second foundation following the departure of several key developers, pose challenges that could impact sentiment. While Ethereum continues to be a major player in the cryptocurrency arena, some investors are shifting their focus toward alternative options like Dogs AI. Market analysts are noting that unlike Ethereum, which has already experienced substantial growth, Dogs AI presents an opportunity for higher returns in a developing segment of the market. The memecoin has garnered attention for its community-driven approach and use of AI-powered trading bots, which purportedly track broader market trends and sentiment effectively. Despite Ethereum's established market cap, which provides a level of stability, it may limit the explosive growth opportunities that new projects like Dogs AI could potentially offer. As Ethereum's market capitalization keeps it tethered to more predictable price movements, Dogs AI's relatively low valuation positions it for possibly substantial returns as it gains traction. Moreover, the current spike in short positions against Ethereum highlights a growing bearish sentiment among some traders. as reported by FX Empire. Shorts have reached record highs, suggesting that a squeeze may be imminent. This environment underscores the complexity of predicting Ethereum's price trajectory in the near future. Investors are advised to remain vigilant and consider diversifying their portfolios. While Ethereum retains its status as a cornerstone of the cryptocurrency landscape, emerging projects like Dogs AI may offer unique advantages for those willing to take calculated risks. As Ethereum continues to innovate and adapt, the unfolding narrative around its price predictions and market dynamics will undoubtedly shape the strategies of both seasoned and novice investors alike. In conclusion, while Ethereum's immediate future remains uncertain, the broader context of its technical upgrades and market behavior presents opportunities for astute investors. As the cryptocurrency landscape evolves, the interplay between established players like Ethereum and rising contenders such as Dogs AI will likely define investment strategies moving forward. Keeping abreast of market trends and technological advancements will be crucial for anyone looking to navigate this dynamic and often unpredictable field. In a volatile landscape marked by uncertainty and dramatic price fluctuations, the cryptocurrency market is experiencing significant turbulence, particularly affecting prominent players like Solana, SOL, and XRP. As of mid-February 2025, both tokens have seen substantial declines, raising questions about their future trajectories and investor confidence. Solana has endured a staggering plunge of more than 40% in just the past month, a downturn attributed to a confluence of political scandal, market sell-offs, and the fallout from a controversial memecoin. The situation escalated when Argentine President Javier Milei endorsed Libra, a Solana-based token, which subsequently saw its market capitalization plummet from $4.5 billion to a mere fraction of its original value. The Libra debacle not only devastated the token's valuation but has also shaken investor confidence across the Solana network, stated Joe DePasquale, CEO of BitBull Capital. The fallout led to a wave of sell-offs as many investors rushed to exit the market in response to the crisis. Adding to Solana's woes is the legal scrutiny facing President Milei, who is now under investigation for potential financial misconduct linked to the Libra scandal. As lawsuits pile up, the broader perception of Solana as a viable platform has suffered, with analysts cautioning that continued missteps could further tarnish its reputation. Market activity metrics reflect this sentiment, with active addresses on the Solana network plummeting from over 18.5 million in late October to below 8.4 million by February 15, suggesting a significant drop in user engagement. Despite these challenges, some analysts remain cautiously optimistic about Solana's fundamentals. Investment firms like VanEck and Pantera Capital have suggested that if the current turbulence subsides, SOL could potentially recover, with projections estimating it might reach $520 by the end of 2025. However, this optimism is tempered by the impending unlock of over 11 million SOL tokens scheduled for March, which could exacerbate supply issues and further pressure the market. XRP has not fared much better, experiencing a 19% decline over the past month and currently trading around $2.59. The decline has been fueled largely by regulatory uncertainties, particularly surrounding the SEC's ongoing scrutiny of Ripple Labs, which has stifled hopes for an XRP exchange-traded fund ETF. Analysts had anticipated that an ETF approval could open floodgates for institutional investment. Yet the SEC's indecision has left potential investors in limbo. The SEC's stance continues to be unpredictable, which is a significant hurdle for XRP's recovery, commented a market analyst. The political climate under the new Trump administration has added another layer of complexity. While Trump has hinted at pro-crypto policies, his administration's actions have so far lacked clarity, further contributing to market hesitance. As a result, XRP remains ensnared in regulatory limbo, with many investors adopting a wait-and-see approach. Nevertheless, there is a glimmer of hope for both cryptocurrencies, particularly regarding the ongoing discussions about ETF approvals. The SEC has acknowledged several ETF applications involving XRP, and should these get the green light, it could potentially trigger a substantial influx of capital into the market. Similarly, there is a growing interest in establishing a regulated Solana fund which, if approved, might restore some of the lost confidence in the ecosystem. In the broader context of the cryptocurrency market, the recent turbulence serves as a reminder of the sector's inherent volatility and the significant impact of external factors including regulatory environments and political scandals. Investors are advised to proceed with caution as the landscape remains fraught with uncertainties. As the situation evolves, the future for Solana and XRP hangs in the balance. While both cryptocurrencies are currently grappling with significant challenges, potential regulatory advancements and market stabilization could pave the way for recovery. For now, investors and enthusiasts alike will be closely monitoring developments as the unpredictable nature of the crypto world continues to unfold.